Welcome to a market of the moment with a week of September 5th, 2022. Michael Oldham team with EXP, Chris Madrid.
Yes, sir.
What's up?
Hey, man, this year is flying by. Obviously with interest rates, continuing to be volatile, there's that's to be expected, right? Interest rates creeping up to the 6% range. Your buyers are less. Well, one, they can afford less, right? So we've been talking about this for months, right? Affordability is a huge concern. As interest rates have moved into the sixes. A couple weeks ago, rates had dropped down into the mid fives, and now again we're back up, pushing over 6% on to clarify. So a 30-year fixed conventional, right? 15-year fixed conventional is down, closer to the 5% range, and then your government loans, which would be like FHA, VA, USDA, for the most part are mid fives, right? So if you're purchasing a home as a first-time buyer, in most cases, you can get a lower rate on an FHA loan than you can on conventional. So it's, at the end of the day, it's really just evaluating the options to see what's going to be better. But yes, at this particular juncture, rates are now moving in the upward trend, right? So we can jump over to that charts slide, and we're going to clearly see, from a mortgage backed security perspective, here we go. If we're looking at the charts, right? So from probably about the middle of August, so we see that probably that red candlestick in the middle there, around that's the early August timeframe. And if we jump kind of back over to that probably August 15th, right, which is a little over 2 weeks ago, mortgage backed securities, mortgage bonds are on that little line that I drew from about August 15th, and now is that's a clear downward trend, right? So downward pressure. Mortgage bonds are down, which typically means interest rates are up. So today was a little bit, there was a little bit of movement where we saw mortgage backed securities trying to push above that that 99 level on the far right side. But right now, we're down, we're down 24 basis points right now, which typically means, we're gonna see a reprice for the worst, which means, rates will tick up a little bit again right now. So this morning things were positive. The Fed Chair Jerome Powell was speaking again today, and just the mortgage bonds aren't liking what he has to say. So the Fed is still scheduled to meet here in a couple of weeks. We're expecting for them to take action on mortgage-backed securities. On the federal funds rate, pushing the federal funds rate up. But again, it's just the mortgage bonds right now are like hanging on every word that he says. And if for whatever reason we feel like he's kind of backing down on inflation, that's just not a good day for mortgage bonds. So again, right now we're going to see another slight uptick on mortgage rates.
Yeah, I can remember when you were talking about us going below the 100 level and what that was going to do to rates, and now we're down at that 99, trying to push above it. So obviously rates are not in a good position at this moment. So, but as we know, that changes from day to day.
Absolutely.
And that's why it's good to have somebody like Chris in your corner. He's watching it, pretty much by the minute. If you're in the market, he can get you locked in at the precisely, best opportunity for you and your family. So, anything else to share on that?
Man, the customers that I've seen right now taking advantage of the housing market are getting homes at or below list, right? And we're starting to see sellers pay closing costs again. So it's again, I can't say this enough that it's a great time to buy right now. Yes, interest rates are going to be a little bit higher, but as we've said, we fully expect interest rates to come down, over the next year or two. So you're going to pay a little bit more right now from an interest perspective. You get a higher deduction on your taxes, and you get the price at a lower level, right? It's a no-brainer. It's a win-win right now.